Hello, I am super excited that you have landed on this video by whatever means you landed on this video, whether a friend sent you this link, you got it off of our social media or our new YouTube page. But the fact that you're here means you are interested in getting more information about the Corporate Transparency Act, also known as CTA. And so right before we jump into anything, I want to let you know you're in the right place because this is an act that can cost you a ton of money, of your hard-earned money. Let me make it real clear before we do anything else so that you don't turn off or tune out and click off of this video. If you are a small business owner, if you are registered with a state agency and you do not become compliant, CTA compliant, you run the risk of an initial fine of $1,000, then $500 per day up to $10,000, and the possibility of 2 years in jail. Now, with that said, you want to listen to everything that I have to say in this video. Listen, my name is Kinite Ledbetter, and I am a tax strategist and business formation expert, and I'm the founder and CEO of This Is Why Inc., which is a finance and business management firm located in the DMV area. For those of you who aren't familiar with the DMV area, that stands for DC, Maryland, and Virginia. But while we're physically located here, we serve clients all across the country. Now, I work with higher earning W-2 employees, business owners, and real estate investors to help them levy the legal tax code to reduce or eliminate their tax liability. In short, I basically help my clients make more money, pay less taxes, and stay out of trouble with IRS. If that sounds like something you are in need of or interested in learning more about, I want you to visit us at www.ti-y.com. Now, what are we going to learn tonight? We're going to learn what is the CTA and why was it created? Who is it for and what are the exemptions? What information will you have to report and what are the effective dates? How do you remain compliant? And again, like I already said, what happens if you aren't compliant? Now, at the bottom of this video, you'll see a little yellow QR code that's going to be on every slide that I'm going to talk through tonight. And if you scan that QR code, you can download for free a free newsletter that I created of frequently asked questions that I answer all of your questions about the CTA. And while you're filing, help walk you through any kind of things that you may have questions about along the way. Some of you may want to do it yourself, and then others of you may say, hey, listen, I don't want to deal with this. I want someone to do it for me. And guess what? If that's the case, we can help you out with that also. You are in the right place. Now, let's keep it moving. All right, so why was it created? So the Corporate Transparency Act is a new anti-money laundering law that was passed by Congress on January 1st, 2021. And you're probably wondering, well, if it was passed back in 2021, why am I just hearing about it? Why is it just becoming a big buzz? Well, originally when it was created, it was only mandated that businesses that work with the government, meaning those who had government contracts, had to comply. But as of January 1st, 2024, it does not matter. All small businesses have to comply. Again, if you are not compliant, and I'm going to reiterate this all throughout this video, the initial fine is $1,000, then $500 per day, and then up to 2 years in jail. Okay, so it is requiring that all business owners file what's called a beneficial ownership information report, also known as BOIR. And you're going to be filing this report with the Department of Treasury newly created office called FinCEN, which stands for Financial Crimes Enforcement Network. Now, why was it created? Well, supposedly it was created in conjunction with the National Defense Authorization Act, NDAA, with the goal of combating money laundering, tax fraud, corruption, terrorism, and other like crimes. I have some thoughts about that. Who is it for? It's for LLCs, in other words, limited liability companies, corporations, whether you're a corporation, a C Corp, or an S Corp, foreign companies. That means if you are a company that is registered in another country, but you do business here in the United States, you too have to comply. And basically any company that's registered with the Secretary of State or a similar state agency. Most agencies, when you form your business, you have to register your business with the Secretary of State. States like Virginia have what's called VASCC, which stands for the State Corporation Commission. So basically, whatever that state agency is that you formed your business through, if you formed your business through a state agency, you have to comply. Okay, now you notice I mentioned previously that there are some exempt companies. Now, what are those exemptions? Those exemptions are large operating companies that have 5 million or more in gross revenues, have 20 or more full-time W-2 employees, and have a physical building in the U.S. Now, this is not an if or, this is an and. You have to have, so somebody may say, oh, okay, I gross 5 million. I don't have to comply. You have to gross 5 million and have 20 or more full-time employees and have a physical building in the U.S. And many of my clients are 6, 7, 8-figure earners. And so they hit the mark on number one, 5 million more. That's nothing for most of my clients, especially those of my clients who are real estate investors in conjunction with other types of business activities. But do you have 20 or more full-time employees? Do you have a physical building in the U.S.? It has to be all of those for you to be exempt. Then there are 23 other categories that qualify for exemption. Those include everything from banks, credit unions, depository institutions, holding companies, money service business, security brokers and dealers, security exchange, clearing agencies, investment companies, venture capital funds, insurance companies, commodity exchanges, public utilities, and then those that I highlighted in red, tax-exempt entities, assisting tax-exempt entities, and inactive entities, which the reason I highlighted those in red is because I'm going to talk about those a little more detail because those are more common entities that some of you may fall in, and you may need to know, hey, listen, I'm a nonprofit, I'm a 501c3, and does that mean I'm exempt? We're going to talk about it. You may be out there and say, oh, I have some inactive businesses out there. Does that mean I'm exempt? We're going to talk a little more about that, okay? Here we go. All right, so what are those exemptions? Like I said, there are those organizations that are tax exempt. This is a more common company because I know a lot of business owners, especially with my clients. Many of you have nonprofits, your 501c3. It is something that helps you fulfill your charitable duty, your community service calling, but it is also an amazing entity to have to utilize as a tax strategy. But again, this isn't a tax strategy video. It's about the CTA compliance. If you want to know how to use a nonprofit or private family foundation as a tax strategy, hit me up, schedule a consultation. Okay, so now you're probably wondering, okay, am I tax exempt? Am I a nonprofit organization? Does that matter? Let's talk about how to determine if you are qualified as a tax exempt entity. Now, churches that do not have 501c3 status do qualify as exempt because religious nonprofit organizations receive all the benefits of those who actually have the 501c3 status. So if you are a church or you're representing a church, you guys are good, okay? Now, remember, you have to qualify. In order to qualify, you have to have any of all of these criteria. 1, the entity is an organization as described in Section 501C of the Internal Revenue Code. The entity is an organization that is described in Section 501C of the Code and was exempt from tax under Section 501A of the Code. Excuse me. But lost its exempt status less than 180 days. Now, these questions here, you're going to be asking yourself, is this a yes or no? Number 3, the entity is a political organization as defined in Section 527E1 of the Code that is exempt from tax under Section 527A of the Code. And then number 4, the entity is a trust described in paragraph 1 or 2 of Section 4947A of the Code. If you answered, listen, if the entity qualifies for exemption, any of these areas, you are exempt. Now, what I want to be clear about is that when on the FinCEN website, when you read through this, and the reason I pulled this out is because it's so much to read to understand your exemption. When you read through this, you have, in this case, all you need is any. See, it says an entity qualifies for exemption if any of the following 4 criteria. So you don't have to meet all 4 of these. You just have to fall in one of these 4 categories. So I want to make sure everybody understand that, and you qualify, because there are other categories where you have to meet all of the qualifications, like what we're getting ready to get to next. Inactive entities. There are many of you out there who have businesses that you started, you formed an LLC many moons ago, or maybe this year, and then you decided, I don't want to do that anymore. And it's sitting somewhere on the Secretary of State website, and that business is inactive. You haven't done anything with it. You haven't done anything under it. You're not moving any money in it, no bank accounts, no none of that. And it's out there. It's in maybe forfeited status. But is it truly considered inactive to qualify so that you don't have to file? Well, let's find out. Inactive entities are defined as any entity that A, was in existence on or before January 1st, 2020. B, is not engaged in active business. C, is not owned by a foreign person, whether directly or indirectly, wholly or partially. D, has not experienced any change in ownership in a preceding 12-month period, meaning the last 12 months. And this was as of January 1st, 2024. E, has not sent or received any funds in an amount greater than $1,000, either directly or through any financial account in which the entity or any affiliate of the entity had an interest in the preceding 12-month period. Let me tell you what that really means. Some of you guys have PayPal accounts or Cash App accounts in your previous business name that you never shut down. You probably still using them. You're not really using it for business, but maybe you use it to make a purchase or transfer some money to a family member or to a friend or something like that. And it's still just kind of in that old business name. If you've moved money in a financial entity under that business name, guess what? You are not exempt under the inactive entities. So with that said, here are the qualifiers. An entity qualifies for this exemption if all 6 of the following criteria apply. Remember, in the previous one for tax exempt, if you fell into one of those 4 categories, you qualify. But in this case, when it comes to inactive entities, you have to qualify for all of these. Again, the entity was in existence on or before January 1st. If you say yes, okay, that's first qualifier. The entity is not engaged in active business. You probably say, yes, I haven't been doing any business. The entity is not owned by a foreign person. Many of you, especially, I don't have too many clients that have businesses owned by a foreign person, but you may be out there looking at this video. But if you say yes, okay, we're moving along. Sounds pretty good. The entity has not experienced any change in ownership in the preceding 12-month period. 9 times out of 10, you may say yes because you haven't been doing anything with the business anyway. But number 5 is the one that really, I believe, is going to get a lot of people. The entity has not sent or received any funds in an amount greater than $1,000, either directly or through any financial account. Here's the problem. So many business owners who just let the business fall to the wayside. They're in forfeited. They're not in good standing. They're not doing anything, but they still have bank accounts. They still have PayPal accounts. They still have Zelle accounts, and they use those things. See, this is where you're going to get tripped up, and really the answer is going to be no, which means you do not qualify as an inactive business. And then the last one, number 6, the entity does not otherwise hold any kind or type of asset, whether in the United States or abroad, including any ownership interest in any corporation, limited liability company, or other similar entity. Listen, guys, you have to be able to say yes to all 6 of these in order to qualify. So if you have that old business out there and you cannot answer yes to all of these, you have to comply. Do not end up with that $1,000 fine, $500 a day, and up to 2 years in jail, potential penalty. And don't forget the QR code that's in the bottom of the screen. You can always click that at any time during this video so that you can get access to that frequently asked questions, which is going to give you all of what's in this video at your fingertips. Oh, that was a mouthful. Let's keep going. Here we go. So what will you have to report? Well, a beneficial owner is anyone who owns 25% or more ownership interest in a business and exercise substantial control. So I want you to ask yourself, are you involved in any business endeavors where you own 25% or more ownership interest, or you exercise substantial control over the decision making of that business? Now, you're going to have to report your business name or trade name, your address, both business and personal, the jurisdiction, and we'll explain that, in which it was first registered, the EIN, TIN, or ITIN. And you're probably like, what is the difference? I'll explain those to you. For each owner, name, date of birth, address, driver's license or passport number. And guess what, guys? Make sure you have your driver's license or whatever identification document you're going to use handy, because you must upload that into the FinCEN site. Basically, an image verifying the document. Okay. So when are the effective dates? Now, the effective dates begin January 1st, 2024. That's when the act went into effect. So remember, I said the act actually was passed in January 2021, but it only went into effect against businesses that did government contracting. Now, as of January 1st, this year, 2024, everyone must comply. But let me just give you some due dates so that you're not panicking and shaking in your boots out there, okay? Businesses that were open before January 1st, 2024, you actually have a year. You have until January 1st, 2025 to become compliant. Now, I'm recording this as of already the fourth quarter of me recording this video, because I've done free workshops all year long. And by the way, if you are not aware that I do free workshops on tax and business, you need to go to my website and sign up quickly for the notices on all of our events and the free workshops and resources that I do. That's www.ti-y.com, and that's at the bottom of every one of these slides on this video. But again, remember, if your business was formed before January 1st this year, you have until January 1st, 2025. But don't wait to the last minute, because again, $1,000 penalty, that's your initial penalty. $500 a day, up to $10,000, and then up to 2 years in jail. IRS is not playing. In fact, let me just go ahead and keep it real. I personally think this is an attack on minorities and small business owners, but I'm not going to elaborate. Now, businesses that opened between January 1st, 2024 and January 1st, 2025, meaning if you just opened this year, you only have 90 days from the date that your business registration was approved by whatever state agency you applied to form that LLC, form that S corporation, form that C corporation. And then once January 1st, 2025 hit, if you're planning to open a business later, you're then going to only have 30 days from the date that your business is approved from that state agency to register. Okay, so I'm going to make this screen big. I want you to just take a second and take these dates in. Okay, let's go. Now, how do you remain compliant? Here's the $1 million question. Well, first you need to determine if you need to file. Are you a reporting company, right? So this little slide that I have here is a grid that I'm showing that kind of give you an idea of whether or not you should, do you have to comply? So under what law was the company created or formed? We already kind of know that. This is kind of like a chart that says if this, then yes, if that, then no. So is the company a corporation? If your answer is yes, maybe a domestic reporting company. If your answer is yes, if the company is a limited liability company and your answer is yes, was the company created by the filing of a document with the Secretary of State? If your answer is yes, then yes, you do have to comply. If your answer was no to all of those questions that I just read out and that are in the little chart that's on the screen, no, you don't have to comply. But I think we have a good grasp on who has to comply and who doesn't have to comply based on what we've already discussed. Now, how do you remain compliant? Okay, if you determine that you do have to comply and you do not fall in one of the 23 exempt categories, which are listed on my screen. And once again, I'm going to make this bigger so you can see there are 23 exempt categories. And we talked about a few of them, the tax exempt and the inactive entity. And then because those are more common with most businesses, may fall into some of those. But if not, you're not compliant. And remember, there are rules to determine if you actually qualify for those, which were the tax exempt. But then there are 23 others, and I didn't go into details about them because those are businesses that a lot of businesses really don't even fall into those categories. And I didn't want to waste a lot of time. Okay. So how do you remain compliant? Again, gather your information. So there was a slide, on slide 10, I had a checklist. That's your name, your business name, your business address, your EIN, your social security, your identifying documents, which is your ID, your passport, things of that nature. So you gather that information. The next thing you're going to do is you're going to go to the FinCEN.gov website. So that's www.fincen.gov, and you're going to go to that website. Now, once you're at that website, you're going to click, see what the arrow says on the beneficial ownership information reports. Once you click that, it's going to take you to a screen that looks like this. And guys, this is literally what it looks like on their site. So this video I'm doing, I'm walking you through exactly what you need to do. However, if all of this still feels confusing to you, if you download the newsletter, frequently asked questions from the QR code on the bottom left of the video, and you still feel like I don't have time for this, definitely reach out to us. We do file BOIR reports on behalf of business owners. Okay, so you're going to select file a BOIR, a BOI e-filing system. You don't want to use, you're going to have the option to do PDF filing. You don't want to do that. The PDF filing option is for companies like mine. Like I file these reports on behalf of other business owners. And so I may need to file multiple reports at a time instead of filing them one at a time. And so in that case, I use the PDF filing. You want to use the e-filing system. Okay, the next screen you're going to see is a screen that give you these options: beneficial ownership information, BOI reporting. And that's what you're going to do. Now, when I originally created this, there was only these two options there. But now, as of today, which is October, there are 3 different options there to file. But it doesn't matter because I'm telling you, you want to select the one that says beneficial ownership information reporting and click get started. Once you click get started, remember I told you there's the option to file the PDF. You don't want to do that. That's for businesses that want to file bulk reports, businesses like mine. You are going to select file online BOIR, okay? Once you're there, you're going to get this kind of warning. It's going to say FinCEN also offers system BOIR transmission via the application interface. Do not choose this option. Bypass this, okay? Next, you're going to have to tell them, you're going to get this pop-up that's going to say, do you agree? Yes, you agree, because you wouldn't be here if you didn't, and it's the law. So you don't have a choice but to agree. Now you're going to come to the initial page. So you're going to get to a page that looks just like what you see on my screen, and they have those 5 tabs: filing information, reporting company, company applicants, beneficial owners, and then the submit button. The first thing it's going to ask you is, what type of filing is this? Is this an initial report? Are you correcting a prior report? Are you updating a prior report? Is this a newly exempt entity? Let me explain to you what all of this means. An initial report means you've never filed your report, period. So you would select that. A correct prior report means you filed a report before, but you realize you made a mistake. So you have to fix it. Maybe your mistake was you accidentally put in the wrong EIN number. Maybe your mistake was, your name is wrong, or the name of one of your partners or the owners is wrong. The bottom line is you're correcting a mistake. Now, the update a prior report means that there's been a change. There are no mistakes, but something changed. For an example, your name changed. I had a situation where I filed my report, and then because I recently got married, my last name changed. So now I had to update my prior report. So that would be considered an update. Or maybe there is a new partner in the business. That would be considered an update. And then newly exempt means, for an example, let's say you just started a nonprofit organization and you filed your report before you received your 501c3 status approval. And so now you just get your letter from IRS. They've approved you as a 501c3, but you already filed this report. So now you are a newly exempt entity. So now you want to go back in and file this and select newly exempt entity. Okay. Next, it's going to ask you, do you want to request to receive a FinCEN ID? You are going to answer, you're not going to answer this. Do not click 3. Do not click 4. This do not apply to you. Now, I'm not even, for the sake of not making this such a long video, I'm not going to go into foreign pool investment vehicle. But if you want to know more about that, click on the QR code in the lower left-hand corner and you can read more details about what that is. But let me tell you why you do not want to click this and you want to just click on to the next and bypass this. If you request a FinCEN ID, you will be required to report forever. Anytime you have a correction, anytime you have an update. Now, there's a lot of buzz in Congress and in the political circle and lawmakers and things like that, that this is not an act that many companies feel is justifiable. And there's talk that there's even been a lawsuit, to say that, this is an intrusion, an obstruction of justice. We should not be required to do this. And so there is buzz that this may go away. And if it goes away, fine. Guess what? You don't ever have to deal with this again. But if you end up requesting a FinCEN ID, you will have to report forever, whether this act goes away or not. So listen, hear me clearly. Hear the words that are coming out of my mouth. Do not request a FinCEN ID. Leave 3 and 4 blank. Okay, the next thing it's going to ask you is existing reporting companies. So we're under the set tab that says company applicant. So what exactly is a company applicant? A company applicant is the organization that actually formed your business entity. So some of you may, like I formed my company, we set up do business formations for businesses. You have things out there like LegalZoom and all of that kind of stuff. Now listen, if someone other than yourself formed your business like a LegalZoom or us, guess what? You are going to have to fill in the company applicant information, and you're going to need to know all of this information. So what you're going to have to do is collect whoever the person is that worked for that company that filed. You're going to need their ID. You're going to need their business name, their business EIN, their business address. You're going to need all the information that is on this page for that company that incorporated your business. Okay. And the government knows who incorporated your business. So you're going to have to get that information. A headache, right? So this is where that FinCEN ID number come in. So for an example, even though I wish I didn't have to do this, but because I actually do business formation as a part of my business services, I requested a FinCEN ID. So I'm going to have to do this forever, no matter what. But why I did it is because when if my clients choose to do this on their own and I form their business, they don't have to worry about collecting all of this information on me and my company. All they need is that FinCEN ID that belongs to me, and they can put that information in where you see on box 18. Okay, so Now, here's the caveat. You see in box 16, it asks the question, existing reporting company. Now, if you check that box, you're going to check that box if your company was formed before January 1st, 2024. If your business was formed before January 1st, 2024, guess what? You are in good luck because you do not have to fill in this section on the company applicant. Because the reality is, if your business was formed before January 1st, 2024, you probably don't even remember who formed your company, or you do, trying to go back and gather all this detailed information. People may have left the company, don't work for the company, or heck, it may be out of business by now, depending on how far back that was. So again, if you formed your business before January 1st, 2024, I want you to check box 16. It's going to grade everything else out. You don't have to fill in the rest of the information on the company applicant. But if you did not form your business before January 1st, 2024, and you formed your business after January 1st, 2024, you need either the FinCEN ID of the company that formed your business, or you have to collect all of the filing company's information, individual name, date of birth, address, business and home, or business or home address, driver's license, passport numbers, and you need a copy of those documents. Listen, this is a headache. I'm telling you, but again, if it's too much for you, you know where to go. Now, the next session is the beneficial owner information. This is you. So let me just go back really quickly. Guys, when we were under the reporting company, that's where you're going to put the information about your company. This screen is going to ask for all the information about your company address, your company's EIN number, your company's contact information, all of that about the company. Now, I don't have it on this screen, but one of the questions is going to ask, and I want to make sure you know what it is. And again, the details of that is in the newsletter, the frequently asked question that you can download if you scan the QR code in the bottom left of the screen. They're going to ask you about the jurisdiction where the company was first registered. I want, when you come to that space about the jurisdiction, that is about where your company was originally registered. So let's say you started your business in Virginia, but now you do business in Maryland and your company is no longer registered in Virginia. You still have to put in that original state and jurisdiction where you were originally registered under the reporting company page. Okay? All right, we talked about the company applicant. Now let's get into this beneficial owner, okay? There are 3 important items to consider under this tab. Are you the parent guardian of a beneficial owner? Okay, so number 35 is saying, hey, listen, check this box. If this is a business that your child, your minor child own, and instead of putting your child's information, because remember, minors, as a minor does not have to comply with this, and you probably don't want your minor's information here anyway. So as the parent of a child, because young people are just industrious, they are owning businesses and doing all kinds of fantastic stuff. But if you are the parent of a minor who owns this business, and maybe you don't own the business, but your child does, you would select, hey, I'm the parent and I'm filling this out on behalf of my minor child. Okay, so you would check this box if you are completing this on behalf of a minor child who owns 25% or more interest in a business. Now, the next one, 36, do you have a FinCEN ID? You're going to leave this blank because you don't have a FinCEN ID. And if you followed my instructions, you did not select to get a FinCEN ID. And then 37, they're asking, are you exempt? And 9 times out of 10, you are not exempt unless you really do fall under one of those 23 categories or 2 specific ones like tax exempt organization, as we defined it earlier, or inactive business, as we defined it earlier. Now, How do you remain compliant? Guess what? This is the last page. You are going to put in your email address, confirm your email address, your first and last name. You are going to select I agree. You are going to select the captcha so that they know you are a human, and then you are going to hit submit. But let me say this, guys, before you hit submit, go back and just take a quick glance at everything you put in so that you can be sure that you didn't make any mistakes, because what you don't want is to have to actually go back and file a corrected BOIR report. Just get it right the first time. Take your time, gather all of this information and get it right the first time. And make sure the email address you use here on this screen is an email address that you actually check. I know you out there and you got those dummy emails that you capture all of your dummy emails and then you don't check it, but make sure this is the email address you check. Why? Because they are going to send you a confirmation and you're only going to get that email once. Once you hit submit, you're going to end up with a submission status confirmation. Now, when I first did this is what the screen looked like, but now they give you, the screen has like a huge download transcript button at the very top of the screen, and I am encouraging you, better yet, I am warning you, download your transcript, save it to a file on your computer, print a copy out so that you have it, and keep it. Now, because the email confirmation that they send you is not going to have your submission tracking ID number on it, you want to make sure you have all of this information on it. Okay. Remember, I've said this throughout. I started the video with this and I'm going to end the video with this. What are the consequences to non-compliance? First, you're going to get an initial fine of $1,000. Next, you're going to get hit with $500 per day, up to $10,000 until you become compliant. And then finally, the possibility of up to 2 years in jail. IRS is not playing with you. You can start these businesses, run out here, get your hustle on, get your grind on, and think you can be in business and not pay attention to regulations and things that you have to comply with from the government perspective. That's a no-go. The days are over where we just out here grinding and hustling. Run your business right. And if you don't know how to run your business right, get somebody on your team that know these things. Listen, you do not go as far as the dream. You go as far as the team. And I am so big on my clients making more money, paying less taxes, and staying out of trouble with IRS. Listen, if you don't know what to do, talk to someone who do know what to do. I only have one request of you from this video. If this was helpful to you, please visit our scan the QR code, so that you can download the frequently asked questions file and have that alongside you while you're filing your report. Or like I said, if you don't feel comfortable doing this and you want someone to do it, we do offer this as a service at This Is Why Inc. And you can get more information about that on our website at www.ti-y.com. And last but not least, well, actually this isn't last but not least because I do have a few more things to say. I am hosting a tax strategy conference. This conference is virtual. I don't care where you are in the country. You can join this conference. It's 3 days of learning tax strategies that the wealthy use to make sure that they keep their hard-earned money and not overpay Uncle Sam. Tax strategies, everything that has to do with making sure your business is set up right, making sure you're in the right entity to reduce or eliminate your tax savings, making sure you understand all the strategies that could save you up to $50,000 or more, help you live a tax-free life, help you reduce your tax burden, and or get you back a greater refund. And because this is election year, I am also going to be throwing into the tax strategy conference details about both the Harris and Trump's tax plan and how you can win no matter who gets the presidency. And I'm also going to be adding to the tax strategy conference details about the Corporate Transparency Act, what's changing, what's going on, and making sure that anybody that comes to my conference and invests in themselves know what they need to do so that they don't waste their money with Uncle Sam. If you want more information about the Tax Strategy Conference, just click the QR code or visit our website. You will be glad you did. 3 days. In 3 days, you're going to learn how the wealthy live tax-free. I'm telling you, it's worth every penny of your investment. And last but not least, how to contact us. Like I said before, we started a new YouTube page where I'm going to work very diligently to bring you all good information, not clickbait or any of that stuff, but information that's going to help you as a business owner, as a person who work hard and do not want to overpay Uncle Sam. So I want you to just head on over to our new YouTube page at This Is Why Inc. Like, subscribe, hit the notification button so that you don't miss any of my upcoming videos. Like I said, one of the things I'm in the process of doing is breaking down the both Harris and Trump tax plans and bringing those videos and that information to you on what's really in the details, aside from what they're telling us in their speeches that sound good, but may not necessarily be good. And just making sure you are informed, because knowledge is not just power, it is also currency. With that said, thank you so much for watching. I do hope to hear from you soon. Jump on our website, get more information, and if you'd like to schedule a free consultation with me, do so as well. Until then, let's think about making more money, paying less taxes, and staying out of trouble with IRS.